Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, May 11th, 2022, video number 2 of the day. And this one will be a little quicker than the last one. With things moving, we have taken out the lows in Apple for the day. You can see, as I mentioned, I've been tracking this trend line for months and months now, if not over a year. And we broke down the other day, back tested, and boom, nice impulsive rejection. As I said earlier today, what I wanted to see is Apple take out the recent lows. This is the holdout in the entire market. This is the most, by far the most important stock, highest weighted component, et cetera, et cetera, et cetera. We've also taken out my yellow lines. That's what I wanted to see. So the sell signals are good. We had a little bit of a whipsaw on the futures, but I followed up in the comment section under the last post, and I encourage you, when things are moving, check in there, because if it's an update that doesn't warrant me sending out an email and a whole post, I'll just do an update to a previous post. And what I updated was, here, I'll find it for you. This right here, it said NQ and ES have moved back to above those previous lows after the post that I showed you them taking them out, of course. However, I showed you a level on QQQ that I didn't mention earlier, and it was back testing. You can see those charts there. So that's it. So in QQQ, remember, the futures are going to show you what happens around the clock. QQQ is regular session, and this is the NASDAQ 100. This is the index. So we got almost a perfect back test of that so far. There's a downtrend line. Really want to see us remain below there. Again, I just cannot impress enough how important this is. This is anybody's game. This is, I'll tell you what, let me go get to what I wanted to get to. Somebody here said, yeah, in my opinion, there's no panic in this market to have a waterfall sell-off. Just wanted to share my 2 cents. And look, I agree 100%. I am not seeing the panic selling. I'm seeing breakdowns. I'm seeing persistent selling. I'm seeing check mark after check mark for the bears. It is unusual, but I have an analogy I'm going to give you here in a second. You know me and my analogies, so I've got one for you. So I agree. No panic selling yet. It's as if the VIX has run into a brick ceiling. Remember, put to call ratios. The VIX is based on put call buying. It's not the put to call ratio. It's an index that's calculated on put and call buying. And I just wanted to say that that one, we're going to look at the VIX real quick here. You know, we're not even close to my my buy signals on the put to call ratios, both the equity only and the total put to call ratios. We're not there yet. I have lines that will typically and have historically marked the end of all in recent years major corrections and even bear markets. So, all right. So I said, so if the VIX can solidly pop above that resistance, and the market impulsively takes out today's lows, that's that's when, at least by my account, the waterfall slash panic selling should begin. Got to give the bulls credit for putting up a heck of a fight so far, but as of now, the rubber band has only been stretched. We continue to stretch it. It has not snapped. You'll know what I'm talking about when we see waterfall selling. Again, we've seen persistent selling, but not what I call waterfall or panic selling. And then I added, look, it goes the other way too. If the bulls successfully hold and defend this key support level, which remember, I'm focused right now. I keep giving you 10-minute charts and short-term charts on the NASDAQ 100, S&P 500, even Apple. But we hit my earlier this week the big support levels on the weekly charts, which were T2, the second targets on SPY and QQQ. So if the bulls can step up and hold it in, they have the potential to set up a sharp rally. So just be nimble and adjust and react accordingly if that happens. Now let me show you what I wanted to. Okay, here's ES, that same 10-minute chart I got out to you earlier. Look at that whipsaw. So you had recent lows. We're making lower lows there, a little bit, 1, 2, 3, each successively lower. Still have the divergence in place. We broke the lows today, but when I got that post out to you, I made clear to say it was a slight, ever so slight. And that's what's happened so far. You know, we keep making these marginal new lows, and there's not, usually on a break of support, especially at well-watched level. And again, this is all intraday stuff. The day is young. We only have exactly 30 minutes to go. It's 3:30 now, so I'm going to talk fast, try to get the video out to you guys. But we broke it, moved up, but again, we hit that resistance on QQQ. That's why you got to keep an eye on not just the futures, the actual indexes themselves or the index ETFs. A lot of traders, even institutional traders, will trade ETFs. Believe it or not, that happens a lot. they'll watch those as well. So that's that. And you also now have a little high water mark there. It was a little. There was some support right here, anyways, and so that's where we stop. So we're right on the line. Let's not read too much into it. Still anybody's game according to this chart. And then NQ, the Nasdaq 100 futures. That one, which to me is more, they're all just as important. Nasdaq isn't going anywhere without the S&P. It's not going to drop 20% without the S&P dropping at least 10 or so, right? So it's S&P can't go up and have the Nasdaq go down. There's just too much overlap in the top holdings. But that's the big level, 12,100. We broke it not even on a 10-minute candle close here. I have to zoom in tight so you can see it. See all these 10-minute candles? They tried to pop it and recover, but basically that's all that is. None of those candles close back above. So that is a textbook so far. But again, we're not seeing waterfall selling, but it is a textbook breakdown and back test so far. Divergence is still clinging on, and also out on the 60-minute and even daily charts. And again, what's missing here, we keep going lower and lower, but it's so orderly, no panic selling. It's almost a little eerie and unnatural, but let's get to the VIX. I'll wrap this up so I can get out to you guys. Let's talk about the VIX Volatility Index. All right, so, first I'm going to show you the VIX. I'll show you the Apple VIX next, but let's just look at the main VIX, VIX Volatility Index. And recently I've been highlighting this level. I've had it color-coded yellow because that's the important level. About 37.61. Remember, the VIX, like natural gas, is volatile, so you don't have to hold it to the penny to that level, but lots of reactions there. 1, 2, 3, almost 4 there, 5, 6, 7, and then again recently. And again, they are just, it's the short vol trade. That's the institution's short volatility. They short the longer futures. And as the VIX approaches expiration, those futures will drift down at 2 or at below the spot VIX level, and then they cover, and that's worked until it doesn't work. And then 2018, it blew up on them. And 1 or even 2, I think, of the VIX ETNs just actually literally blew up. So the VIX exploded back in 2018, but a couple of the ETNs that you were in, if you were long volatility, should have went up. Where's 2018 right here? But they didn't. They actually blew up. And what blow up means, an ETN, unlike an ETF, an ETN is just an IOU from a bank or whatever investment company develops it. They're pledged to pay you back. They have vehicles and derivatives that track what it's supposed to be tracking. But if that model breaks, which it did on those two VIX ETNs, then they just say, hey, sorry guys, it was in the prospectus. We can't pay you. The VIX exploded. You should have made a ton of money. The VIX went up, from this point, just a matter of days here. I'm trying to measure high to low, 485%. Yeah, those XIV or whatever they were, they blew up. The other ones didn't. So just keep that in mind. Now, with all that being said, what I was going to tell you is, if you are, there's a part of you that's an aggressive trader and you have, or even a gambler and you like to go to Vegas or bet the ponies or whatever it is, and you want to throw a bet, place a bet, well, this is it. Because if the markets crack, we're right at, here, remember, if you're new, catching up, right at support, my second target right there. Actually below it now. We've taken it out with the break of today's low, so we're below. But when you look at the weekly chart, the week's not over. They could run this candle back up, but as of now, we're below it. And the VIX is not responding. So here's what I'm getting at. I think there is an opportunity here. I think the risk reward is very attractive. I think the VIX is at that point. If they can't rally it up here, see S&P 500 right on my second target. That's why you have the QQQ cracking below, because Apple broke. Apple has a bigger weighting in QQQ, even though it's still the top holding in SPY. It's just a much smaller percentage weighting. But there it is. So we're at that point. And if it happens, and if it needs to happen now, I still think it's going to happen. You have the potential for the VIX to explode here. That is a brick ceiling. That is a well-defined resistance level. And what does explode mean? It's hard to give you a target, because when it goes up, what you just trail up your stop, give it a pretty wide stop, but it'll probably shoot up something. That was what it did when COVID hit. That was an all-time high. But even these spikes back here, these two previous spikes went to about 50.37, and that is 35%. I've already given you the VIX as a trade idea. I've given you VXY, which is a non-leveraged ETN, and then is it UVXY? I believe it's 2-time leverage if you want the juice. All right, so now my analogy. And this is going to play into the VIX. And we're going to look at VIX Apple, right? The Apple VIX. Apple volatility. Apple VIX. All right, so it's all about Apple to me because that's the last of the holdouts. It's everyone. I talked about it earlier today. Let's remember psychological importance of the market as well as the mathematical importance due to its weighting in the index. I'm going to move this number up right here, about 49.75. So this is the VIX only for Apple. Apple's so big, the darn thing has its own zip code, it's its own country, and it's got its own VIX. In that VIX, the Apple Volatility Index, which trades on the CBOE, needs to pop this level about 48.75, and then you should run, and the market will break. So as I've been saying for weeks now, when Apple breaks, it's the last of the generals to be taken out and shot. The market breaks. The bears have won pretty much probably won the war, and it broke support today. We'll see if it closes a week below those supports, see if it's a whipsaw, see if they fire off their mega stock buyback program. I can't trade on what may happen. I trade on the charts. If they ramp it and reverse it today, there's a potential for a big bull trap, especially at the end of the week here if these support levels that I just showed you on SPY and QQQ hold, especially if QQQ snaps back above. So be ready to pivot, that's all. But as of now, bears are in control, so the shorts are still looking good. All right, so the analogy is, and this has to do with the VIX, whether the VIX is going to explode to the upside and the market's going to have that final capitulation type sell-off where we drop down and hit my next targets. On SPY, that's about 354, and then QQQ, next target's about 383. I'm sorry, 268 and or the trend line. So whether or not these are going to be hit and going to be hit in short order, and even possibly that fourth target, I think we're at that pivotal point. So here's the analogy I'd make. And it kind of plays into what the subscribers' comments were. Hey, Randy, I don't think we're going to break down this market. It's just there's no volatility, there's no panic selling. We're moving lower, but there's no panic selling. All right, so go back in time, quite some time, and I was a young kid and I was in college and just went off to college, and a buddy of mine had got hold of some dynamite, and this was gel stick, the real deal, not firecrackers. This was dynamite. His father was a builder up the mountains, and they used it to clear earth and stuff, and these were 12, maybe even 15, 16-inch long sticks. Looked like regular dynamite you see in the movies, but it was gel stuff inside, whatever that is. And they gave me blasting caps, a couple sticks of dynamite, and the blasting caps are these little metal probes you stick in with 2-wire short wire leads coming out, and that's it. No instruction manual, nothing, but you can figure out what to do with that. So we're like college kids do. We're having some drinks one night, a few beers, and we're say, hey, you want to go blow something up? So what we do is we grab the dynamite and the little one stick of the dynamite and one of the blasting caps. And I remember we grabbed 30 feet of speaker wire off one of the stereo systems in the apartment we were living in, me and my roommates, and scrounged around. Again, you just makeshift this stuff. Only battery I could find was a 9-volt, one of those little square ones. So we go down. There's a big lake in the middle of this apartment complex in Tallahassee, and we take the dynamite, hook the speaker wires up to the blasting cap, toss it in the middle of the lake. Again, good, 30 feet of wire there, and I remember pushing down both ends of the 9-volt, both terminals, and it was probably 5 seconds. Counting slow, Mississippi seemed like forever. I turned to my friend. I said, "It's not working." And right when I got to the K or the ING, not even that far, the ground shook, and the biggest water spout you've ever seen. I mean, it probably was 20 plus feet into the air. Shot up out of the lake. And so here's the point. All right, so I realized what happened in hindsight. There's a lot of resistance in the speaker wire, especially that distance it takes to travel. And a 9-volt battery is probably a lot less voltage than the you're supposed to apply. Again, it didn't come with an owner's manual. That's all I had. Had I pulled my finger off the battery terminal before that 5-second mark or whatever it was, it would have never went off, right? So it would have been a charge, a potentially explosive thing that didn't have the proper catalyst to ignite it. That's my analogy. That's where the markets are now. We can take out these levels, and the VIX can, if we can, start really flowing down here tomorrow, tonight. I don't know. Now there's only 20 minutes left in the day, so maybe again it doesn't happen. We're not seeing that panic selling. What needs to happen, I believe, maybe I'm wrong, if the market can just push a little lower, clearly take out this 394-ish level right here on SPY, because QQQ is already taken support, but SPY is still holding it close enough, again on a weekly chart. And more, or as importantly, they're not buying it. There's no fear in this market. They're still not loading up on put protection. But if the dam breaks and we pop all those levels I just showed you, these three, QQQ, SPY, and the VIX, VIX needs to pop this, then you get it. If not, then it was just a potentially explosive setup that never failed to materialize because you didn't apply the proper catalyst. And that's it. The powder keg never got ignited. Now, again, doesn't mean we can't turn around later on or at some point later take that out. But as of now, that's what needs to happen. And like I said, I don't think we're going to sit here forever. That's usually not the case. There's still divergences in the charts. So if the bulls can hold the line, you go back to the 60-minute charts and the daily charts, there's still potential to trigger a nice little bear trap here, where if the bulls can ramp it back up above 300 or so, keep the divergences in place, and then carry on and go and take out the downtrend line, the same scenario I told you. Favoring this because right now we've had nothing but check marks for the bears. We don't have that impulsive selling. All I'm trying to say, it doesn't mean it's not around the corner. This thing can ignite any second now. So if you are aggressive and you want to take a shot on something, VIX futures are the raw play. That's what the pros buy. I've got quite a few VIX futures, VIXX, and you go and buy the Mays are about to expire. They're rolling. You can get the Junes right now would be the most active contract, and or you can go out to the Julys if you want. And if not, VIXV I've covered already as a trade idea, and see, you can see the same thing. Here's the it's right here. Resistance, 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 resistance needs to pop. These are all potential targets right there. That one might be a bit aggressive, but it's certainly doable depending on what happens. That'd be about 100%. No, a little more than 100% return if we get up to that 52 mark, about 150%. And then UVXY. Be honest, the VIX has so much juice in it, you really don't need the leverage. And the leverage is going to work against you if we continue to grind around. And then finally, let me leave it at this. Just as the VIX is potentially explosive to the upside in the right conditions, it is also implosive. It can implode to the downside. If the market rallies, money flows out of the VIX so fast your head will spin. So it cuts both ways. Don't get married to it. Recognize a bull trap or bear trap if we get one, and the sooner you recognize, the better off you're going to be. So that's it for you guys. Let me wrap it up here so I can get the video out. Quick update. I'm flying early Friday morning. My wife and I are flying out to Hawaii, and we're going to be gone for over a week. So I'll be out from Friday all of next week. There's a 6-hour time difference from where I'm at, so updates, and not to mention we have got a bunch of things planned, so I'll get updates out. They're not going to be very frequent. They might be coming out real late in the day or super early in the morning. I'll try to send those emails. Some of you might have push notifications on your phone. I'll make a point not to wake you up at 4 in the morning, or whatever time it is over there when I get those updates out. But again, so I'll be here through tomorrow, scrambling to get ready to leave town, and hopefully the big fireworks don't start when I'm gone. But yeah, I'll be traveling. I'll have OCO orders in place, so I'll be able to hopefully capitalize on it. It's just going to be a little harder to pivot. if I'm not in front of a computer at the time. All right, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.